Why do you sometimes tell people not to be an S-Corp? Because there are reasons to do it and reasons to not.
Yeah.
I feel like every video on YouTube is, you should be an S-Corp, you should be an S-Corp, you should be, but they don't talk about, like with anything, there's give and take.
Yeah.
So we've actually told quite a few clients, like, hey,
Yeah.
probably shouldn't be an S-Corp yet. Why do we tell people, or what should business owners look out for?
One, I think that most people only hear about the benefits. Yes, it can definitely lower your taxes. Another thing it can do, it can actually complicate your taxes as well. And I'll give an example. So one thing that we hear in business, I would say the number one reason why you shouldn't do it is that you're unorganized. And what do I mean by that? If you don't have a separate business bank account, if you don't have a QuickBooks file, if you don't have basically any bookkeeping, that's going to be a real pain for you. Because when you have an S-Corp return, it's more complicated filing fees. You have to do a separate return. There's more numbers you have to fill out. You can't take the same amount of distributions. There's just so much more compliance where it doesn't make sense. So for example, if you're making $40,000 in profit, the amount of tax it's going to save you is going to increase by your compliance. Now what do I mean by that? Extra bookkeeping fees. You have to do payroll for yourself. You'd be like, what, payroll, what? You have to do, you have to take owner's compensation. It's like all these things. You're like, my accountant didn't tell me that. No, they didn't, because the reason is they get extra money because now they have to do an extra return. So they win, but you're like, wait a minute, I have to do this every day. So I'd say number one is you're not organized. That's the biggest one. Number two, if you have different partners, for example, and you want to take a distribution or a profit share, a dividend, whatever name you want to call it, they have to be equal to your ownership percentages. What do I mean by that? If I have a partner and we're 50-50 and we're taking distributions or profit share at the end of the year, he can't take $10,000 and I can take 20. We have to take the exact same amount. But if you say it as an LLC that you work for, you can take out whatever you want. So there's just more complexities that you have to do. And we've told many clients, like I have one client, he's a single member LLC, he pays a crap ton in taxes. And I've told him, I said, hey, we can help you do this. He's like, yeah, he's like, I don't want to do QuickBooks. I'm kind of a loose cannon. Even he said, and we're like, yeah, you know what? You're right. You shouldn't do it because you're not the type of client, you're not the type of business owner that wants to get bogged down by that. So for him, it doesn't make sense. But for you, if you're super organized, yeah, by all means.
So that's one thing that's kind of interesting is you mentioned kind of like both sides of it. Like most accountants and most CPAs would tell a business owner, yeah, do an S-Corp, they get more money.
Yeah.
Because they get to file another tax return. Maybe they do the bookkeeping and stuff like that for them. Why do you almost do the opposite? Like, and I don't mean not recommend it, but like, why are you like not just taking the money and running? I guess basically.
To me, because to me, I'm playing chess, not checkers, and I'm sure you guys have heard that analogy before. If I sell something, an extra tax, essentially I'm selling an extra tax, that's what I'm doing. If I sell an extra tax return to somebody who may not need it, yeah, sure, I'll get an extra $1,300 or $1,500, whatever they cost. But now next year that client's gonna be like, man, I don't wanna do this shit. Oh, who recommended? JT did? Screw him, like I don't wanna do it. And now I've just lost a client because I was trying to not pull a fast one, but recommend something he didn't need or she didn't need. But if I'm honest with the client, say, hey, like, I don't think you're ready for this yet. Let's wait 2 or 3 more years. Now the client's like, okay, yeah, he's not just trying to like ring me out for every single cent. He's actually thinking about what is best for me. So to me, like I said, the reason I do is I'd rather play the long game. I'd rather have you as a client that doesn't pay as much for a longer time because now you're gonna remember that. Whereas me, if I'm just like, yep, let's get somebody in here, let's make them an S-Corp, a C-Corp, let's do all these fancy things, and it's like, you don't even need that. So that's why I do it. I'm not saying other accountants do it wrong or do it differently. That's just the way me and Drew, we run things here. We want you to benefit, not us.
Very good answer. No, honestly, because
I stumped you.
No, not surprised. Maybe not stumped. I know how we work here.
Yeah, I didn't know
that. Excuse me. So that makes a lot of sense in terms of like playing the long game because you know this. I used to live in another country.
Yeah.
And it was very common there for people to play the short game, and it drove me nuts, and I hated it.
Yeah.
And I used to throw it in people's faces, and they knew it was the truth, and then they just didn't want to admit it. But yeah, no, that makes a ton of sense. So you mentioned for an S-Corp, somebody who's like very unorganized, probably not for them. Or kind of like the example you gave, like one of our clients, right? He even said, he's like, I don't know, man. Like I'm just being honest, I'm not going to keep up with this.
Yeah.
So for those people, no S-Corp, just it's not worth it.
Yeah.
What's another criteria that would be like, hey, for you, probably not an S-Corp, like it's not worth it?
One, if you want to have more than 100 shareholders, and what I mean by that is if you have the idea that your company is going to be public one day, you don't want an S-Corp, because obviously if you're going to issue stock, you're going to have more than 100. Like I own AT&T stock, like I'm along with millions of other people. You can't be an S-Corp because you can only have 100 shareholders. That would be one. Another one is if you want foreign investment. So for example, you have to be a U.S. basically you have to have a social security number. If you're not a U.S. resident or U.S. alien, you can't own an S-Corp. For example, if your family member who wants to be your partner lives in Canada and isn't an American, they can't own the S-Corp. So those would be two other reasons why you wouldn't want an S-Corp.
Gotcha. You kind of touched on like the amount of money that would be necessary. Earlier, I feel like you just kind of like threw out like a random number. I want to say like 40,000 was what you had said. But like, is there a certain threshold where you say like, hey, if you're below this number, no S-Corp. Like it's just not worth it in terms of the amount of taxes you can save against the compliance costs you kind of mentioned. What is that threshold then?
We typically say 50, and that's 50 in profit, which if you're not sure what profit means, it means all of the money you bring in less all the money you spend. So whatever's left over. If you're not at 50,000, we don't recommend it.
A year or month?
Per year.
Okay.
Yep. Yeah, so it'd be per year that you make. So that's, what is that, like $6,000 a month in profit every year?
Sounds about right. Somewhere in there, yeah.
Yep, and the same thing is that you have extra compliance. You have to do an extra tax return. You have to do payroll. You may or may not have to hire a bookkeeper because your accounting is going to get a little bit more complicated. So those are three things that are already going to be. And we find that when you're under 50,000, those extra fees of the return, the payroll, and a bookkeeper don't really outweigh the tax savings. So you're kind of like staying in neutral. Honestly, you're staying in neutral, and you're just making your situation more complex, because you are going to have to change stuff about the way you operate from an accounting standpoint. So if you're not making that, we typically say no. I've heard other accountants say as low as 25, which I think is like really, really low. But we say 50. That seems to be a pretty good number.
All right. Well, if someone wants to switch to an S-Corp, or basically just needs to find out, should they need advice, other business owner.
Yep.
How do they contact you? How do they work with you to make sure they're doing everything right?
Yeah, click the link somewhere in this video. You can apply for a call to work with us. You go through a questionnaire, and then if you pass that questionnaire, which we think most people should be able to, somebody on the team will reach out to you with the schedule. Then you upload all the documents that we need, and then we'll get on a call and we'll be able to point you in the right direction.
Awesome. Cool. Well, JT Pells, the tax quarterback, thank you.
You got it.